All right, welcome everyone. Today we're going to go into the 7 assets that are way better for storing your money than underneath your mattress, right? So mattress is not going to be the best place to store and make money. Well, if you stay to the end, what I'm going to do is we're going to look at the asset that I use to get my net worth over $1 million. First up, we're going to review gold, silver, and platinum. Many investors invest in precious metals as an insurance. Precious metals will always rise in value when you have inflation, like we currently do now. So in the 1950s, an ounce of gold was worth $400. But if you look at it in 2023, that same ounce is priced at $2,000. So the future outlook shows by 2032, gold could go up to $10,000 an ounce. Now that's speculation. We're not saying that that's going to happen. So if that does happen though, and that's 10 years, gold would be worth 5 times what it is now. Now, if you don't want to directly invest in just buying gold, right, you can also invest in gold ETFs to get started. Now, this would be one of the safest ways, and you could look at iShares, MSCI Global Gold Miners ETF, and this is one you could check out. Now, what I wouldn't do is I wouldn't take out money out of your retirement account to go buy precious metals. That is not a good idea. And you want to be wary of fraud when buying gold, especially those TV commercials where they go, hey, buy these gold coins and they're going to skyrocket in value, because they charge you way more than what the gold is worth. Investors also have to be wary of outright fraud. So AARP reported that these 2 Los Angeles men bilked at least 1,600 people out of more than $185 million between 2017 and 2020 by charging them double or quadruple the spot price for gold bullion. Now, many of these victims were older people who used their retirement savings to go buy those gold coins and bullion. Pisses me off that people do that, but you have to be careful. All right, next up, we're going to talk about art. Art plays several roles within an investor's portfolio, right? Diversification is key when it comes to investing, and adding art can help you achieve that goal. Now, art is kind of a unique asset class with a low correlation to stocks, bonds, and other traditional investments. So when stock prices dip, art tends to hold its value. So that's why a lot of wealthy people buy art and, art for their house. For investors looking to preserve their wealth during a volatile economy, art can also act as a hedge against inflation. Now, because it's a tangible asset, art can perform well during periods of high inflation, and it's not as susceptible to market fluctuations. However, there are some drawbacks to investing in art. One of the main negatives is lack of liquidity. If you need to access cash or liquidate your investments of physical artwork, you'll need to sell through some kind of gallery or auction house or private art collector. And it can be a time-consuming process to sell a valuable piece of art. So art tends to work best as a long-term investment, something that you're going to hold on in your family. Counterfeit pieces are also a common challenge for art investors, especially those that are new to the art market. So it can be really easy for you to get faked out, and it's really hard for you to tell if it's a fake or an original. So working with a reputable gallery or art dealer is going to be essential if you want to invest in art. Now let's talk about safe haven currencies. So this is our third one here. Many rich people keep their money in Swiss banks because of its strong economic system. The Swiss franc or British pound is going to be what we consider a safe haven asset. So if you remember, during the Russia and Ukraine war here that's going on, the U.S. imposed sanctions on Russia's energy trades. Russia executed trades in Swiss francs. This event skyrocketed the demand for Swiss francs, leading to a huge upswing in appreciation against all other currencies. Now, you might not be able to go and fly over and open a Swiss bank account. So if not, you can invest in currency ETFs. So the best 3 currency ETFs that we researched were Invesco DB US Dollar Index Bullish Fund, the Wisdom Tree Bloomberg US Dollar Bullish Fund, and the Invesco Currency Shares Japanese Yen Trust. So those three you can go check out, see if it's something you're interested in. Now coming in at number 4 is cryptocurrencies. So if you haven't heard of cryptocurrencies or Bitcoin, you haven't been living. So cryptocurrencies like Bitcoin and Ethereum have gained popularity as alternative investments. They can offer substantial returns, but they also come with really high volatility. So you need to really know what you're doing. Some view them as a hedge against inflation and a way to diversify their portfolios. However, the regulatory environment and the inherent risk associated with cryptocurrencies should be considered before you start investing. Prime example, I had a few friends of mine, they invested $30,000 in crypto Bitcoin and they got scammed. They lost all of their money and they're trying to recover it, but I do not think they will recover any of it. Now, with the rise of fintech and cryptocurrencies, it's no surprise that it is a better option than, keeping your money hidden under the mattress if you do it right. So with blockchain technology only getting cleaner and being widely adapted, digital currencies may be an excellent way of parking your money with good returns in the coming years. So you can use platforms and venues for buying crypto. This include digital wallet providers. You can use centralized spot exchanges, OTC desks. These are private over-the-counter exchange services used primarily by really high-end net worth individuals. You can use peer-to-peer marketplaces and even payment apps like PayPal. On number 5, let's check out the sovereign guarantee. Okay, in 1971, President Nixon abolished the gold standard, which I don't think really was a good idea, but he did. And the US dollar became the legal tender. So this means your money is as stable as the government is. So if the government is stable, your money should be okay. And usually governments are the last to default. So if a government defaults, that nation's going to be in serious trouble. So the best way to invest in sovereign guarantee is through government securities, or GSECs is what they're called. Now, you really need to look at government's global strength when investing in GSECs. Remember the Greece financial fiasco that just happened? So you need to be careful still when you're investing in GSECs. In the U.S., you can invest in Treasury Bills, notes, or bonds. These can offer better returns than a bank savings or checking account if you just let them sit in those two accounts. But according to Fortune, investing can get yields approaching about 5% on Treasury bills, the T-bills. For example, a 6-month T-bill is currently yielding about 4.75%, while the 10-year Treasury is yielding around 3.47%. The interest rate on bonds purchased between May 2023 and October 2023 will pay interest at an annual rate of about 4.3%. The interest rate on the I-bond is tied to inflation and changes every 6 months, so it's not set. A bond is a loan to a company or government that pays investors a fixed rate of return over a specific time frame. So long-term government bonds historically earn around 5% in average annual returns. Now, what I did with my money is I decided to put my cash into the bank in a high-yield savings account because I was getting 5% there, and I didn't have to do the Treasury bill where, I have to keep it in a year. So next up is value stocks and mutual funds. Should investors buy value stock funds today? Good question. Investors who own core stock or mutual funds or exchange-traded funds, ETFs, especially those tracking a broad market index such as the S&P 500 or the Wilshire 5000 index, you already have exposure to value stocks. You're diversified already. It's unlikely you need to add more value to your portfolio as they already have plenty. However, some investors may think, hey, value stocks are the place to be. And they like to tilt their portfolios towards that style. Now, for such investors, there are many good value stock ETFs and mutual funds to choose from. Now, here are 2 value mutual funds you can check out that we found for you. Pinnacle Value Fund, and then also Good Haven. All right, last but not least, this is the one I was telling you about where I've made most of my money and done very well, and that is land and real estate, buying into that. So real estate and land both provide excellent inflation hedges in your investment portfolio because they are both built on land, which is also always in demand for residential homes, offices, commercial properties. Land is always needed. So according to some statistics from Bloomberg analysis, despite a significant decline during the 2008 housing bubble that was a disaster, house prices have tripled between 1992 and 2020. So therefore, when the value of the dollar starts to decline, having exposure to real estate market is always beneficial. It's advised to start investing in real estate early. However, most investors or small investors only consider entering the real estate market later in life because they only think of real estate in terms of the house they live in currently. I didn't do that. I invested in homes starting at the age of 25, but not everyone does that. Now, you don't need a lot of money to get into real estate market. Instead, what you can do is you can invest in REITs, which are mutual funds with a real estate focus. Now, one of the most well-known REITs in the United States is Ventas Inc., or VTR, which invests in healthcare, real estate, including senior housing, research and facilities, hospitals, and other properties. You can do what I did. Like I said earlier, you can take out loans to buy rental homes, then you rent out those homes. They should cover your mortgage payments and other costs. And then as time goes on, you pay off those homes, you got a ton of cash flow coming in. And that's what I did for my rentals and my real estate portfolio. Now, hey, if you found this video helpful, give it a thumbs up for me. And if you can, hit the subscribe button for more videos on wealth building and making money. And let us know your thoughts in the comments section.